So if you're a CPA, bookkeeper, accountant, or other tax advisor, today I want to talk to you about sales tax nexus and all the things that can go wrong if sales tax nexus is not determined correctly for your clients, and some of the common missteps that we see folks make when it comes to determining nexus. So first, let's talk about the consequences of not determining sales tax nexus accurately. The biggest thing is if your client has sales tax nexus in a state, they don't realize it, they don't begin registering, and they don't begin collecting tax in a state, that means that they're going to have uncollected tax for maybe a long time. Maybe it might be a year or two before that nexus analysis is performed again. So it's really a big deal whenever you tell a client either you do or you do not have sales tax nexus, and we have so many checks and balances within our workflows and our systems to make sure that the advice that we're providing to our clients is rock solid. Imagine a client has sales tax nexus in Illinois and you tell them that they don't, and they have millions of dollars in sales in Illinois. What this could mean is that your client would owe all that money, and because you told them wrong information, you could then be on the hook, and lawsuits do happen in this space for this reason. So what are some common ways that sales tax nexus goes unnoticed? Well, I think that the most common thing I see with accountants is not thinking about third-party warehouses. So if your client sells online and they're using a third-party fulfillment warehouse like Amazon FBA, that means that their inventory is going to be stored all across the United States. And so your client might only have employees in one state. They might only be operating out of one state, but because their inventory is being stored across 20 different Amazon FBA warehouses, and Amazon's moving and shifting that inventory every single week, they don't realize that their client actually has a physical presence and therefore has a sales tax collection responsibility. Another big mistake we see is not considering contractors. So most accountants know that having an employee will trigger sales tax nexus. They don't realize that contractors can also create sales tax nexus. Now, it's not always going to create sales tax nexus. It has to do with what kind of work are they doing, how long are they doing the work, like is it related to sales and marketing, or is it like related to support or the delivery or installation of something. I mean, there's really a lot of particulars when it comes to whether or not a contractor's work is going to create sales tax nexus. It's probably about 50-50, though there is a particular kind of contractor that has its own whole type of nexus that is often forgotten about, and that is affiliate nexus. So affiliate nexus is when you have a business that is working with affiliates all over the country, and they're making like TikTok videos and YouTube videos or blog posts or whatever, and then they're including an affiliate link, which is then redirecting to a website so that the end consumer can purchase the product. There are very specific rules in every single state regarding how many sales and how many dollars worth of product are sold through an affiliate are required before sales tax nexus is triggered. But oftentimes accountants don't even realize that exists, and they just miss it entirely. Another thing that is almost always left out of nexus reviews, even by sales tax companies, which is really frightening, is something called notice and reporting requirements. Now, notice and reporting requirements, really complicated, so I'll try to break it down so it's really simple. Basically, notice and reporting requirements existed before economic nexus. So economic nexus is what allows states to force a business to begin paying sales tax, even if they don't have a physical presence there, just by crossing certain sales thresholds. Before economic nexus was legal, based on the Wayfair Supreme Court ruling, states had this notice and reporting requirement law. It was really sneaky, and it technically wasn't unconstitutional. It technically wasn't illegal, but it was basically doing the same thing as economic nexus in a roundabout way. And what it did is it said, if you make over a certain dollar threshold of sales, you have an obligation to notify every single one of your customers that they need to pay us the sales tax through use tax. So you need to notify all the customers. You need to notify them how much they need to pay us, and you need to do it in the template that we provide to you, and you have to mail it, and you have to provide proof to us that you did all those things with a spreadsheet in our format that we dictate, showing us all of your customers that you notified and the dates of their purchases. That sounds like an insane amount of work. And in many of these states, it's just $10,000 in sales into the state, right? So a lot of people don't realize that these laws are still in effect. And the law was created so that you could either follow all of those crazy, insane, absolutely ridiculous notice and reporting requirements, or you can just register for a sales tax permit. So what are you going to do? It's a little bit like bribery. It's like, well, I'd much rather just register for a permit, begin collecting and remitting, than dealing with something that is way more complicated than just filing a sales tax return. Filing a sales tax return is already complicated enough when you consider all the factors that go into it. So notice and reporting requirements are a big deal, something that I think many businesses are not looking at. And there is this weird situation where you have to figure out what you want to do. If you're over the notice and reporting requirement threshold, but you're below the economic nexus threshold, and we do see that come up time to time, and we work with our clients to come up with a solution that they're happy with. The last thing I want to talk about is when a business just isn't looking at the economic nexus rules correctly and they're doing the calculation wrong. And you might say, like, well, what's the big deal? It's $100,000 in sales or 200 separate transactions. How can it be this complicated? Well, the devil's really in the details, because when you look at the state's rules, it depends in each state what's included in the calculation. So when we're talking about that $100,000 to 200 separate transactions, is that all sales? Is it just taxable sales? Do we exclude exempt sales? Do we exclude marketplace sales? Do we exclude resale sales? Every state has a different rule on what they include in that count. And then every state is different based on the time period that they want you to use. Some will say current or prior calendar year. Some say the last 4 complete calendar quarters. Some say the last 12 months. Some have like a way more ridiculous, complicated time tracking mechanism, which honestly is just sort of insane. All of this is detailed and outlined in the economic nexus spreadsheet that's available in the resources section at thetaxvalet.com. So if you want to learn more about it, you can check it out there. So those are the ways that we see businesses kind of messing up sales tax nexus reviews. And if you mess it up for your client's going to get bad advice, and that ultimately can cost you a whole lot of money if they're going to be holding your feet to the fire and saying, hey, you told me that I have Nexus here, or maybe you didn't notify them that they had Nexus and now they owe a bunch of money. But I think there's this like deeper question of like, whose responsibility is it to know where a business has sales tax nexus? I mean, ultimately, it's your client's responsibility. But if you do not disclaim that you are not doing nexus analyses for your client, and you don't have a conversation with them clarifying that, like, hey, anything related to sales tax, I'm not handling, it is totally fair for a business to assume that the client is going to get some level of advice and expertise from their accounting advisor. I mean, wouldn't you expect that? So you really need to be careful, because even if you're like, hey, I never told them I was going to do it, there's actually an assumption, and there's legal precedent for this. We're going to talk about this in another video, but there's legal precedent for if you don't notify your clients of their responsibility, even if you never said you were going to, that they have a fair assumption that you should have. So you really need to be careful, not only to provide good advice if you are providing advice, but you're being very specific as to what advice you are providing. And if you are not providing advice about sales tax, you're very clear about that. I hope this helps. If you are interested in potentially partnering with TaxValet, sending your clients to us because you never want to think about sales tax again, we'd love to have a conversation, figure out if we're a good fit for each other. You can learn more at thetaxvalet.com. Thanks.